Folks, I hope you are ready for the absolute most insane week of the market so far this year, certainly of the stock market so far this year, and this will possibly be the most insane week of the entire year. The amount of things that are happening this week, get your money ready. That's all I'm going to say, because it is going to be absolute insanity this week. I'm going to take you through everything that's going on. I mean, just Thursday alone, within a 15-minute span, we're talking about over $4 trillion is going to move within a 15-minute span on Thursday. Over $4 trillion, okay? This is crazy. I'm going to take you through everything that's going on, my expectations. Some of my personal companies are reporting earnings this week. I want to take you through those. If I think they're going to beat or they're going to miss, what's going to happen with their stock prices, what people are looking at. This is going to be an in-depth video. Hope you guys enjoyed. As always, it is going to be absolute insanity for this next few weeks. If you're looking to see all the stocks I am personally buying and selling right now, check out the Patreon. They'll be linked in the description. If you're looking to join us or apply to join us in my private stock group and the private wealth group, check out the description area. Also, there'll be an application down there, okay? First thing up here, okay, before we get into all the craziness with earnings and the trillions of dollars that's about to move and all those sorts of things, okay? First thing up here is Fed meeting. Happens this week, okay? Tuesday, Wednesday. This matters in a massive, massive way. Everybody in the market is expecting the Fed to move a quarter point, essentially, okay? 25 basis points when they make their next Fed decision, okay? The issue with this is, obviously the market's been rallying, financial conditions have been easing, so there is at least a small possibility. I don't think it's a probability, it's a small possibility that the Fed moves actually 50 basis points. If that happens, okay, all hell's going to break loose in the market, because no one's expecting this. Like, over 95% of Wall Street is expecting a 25 basis point move. So if the Fed, for whatever reason, comes in more aggressive, or they have some super crazy commentary about inflation's going to be so sticky and we're going to have to keep raising interest rates, and we wouldn't be surprised if we have to raise interest rates 4, 5, 6 times this year. If they come in with anything crazy, that's a moment in time where all hell breaks loose in the market and everybody's going to absolutely flip out, and get your pocketbooks ready if that's the situation, okay? Because there will be a lot of buying opportunities. Now, once again, that's not the expectation. The expectation is 25 basis points. And if that happens, honestly, the market's probably going to rally, because then the market and Wall Street is going to believe that they have this whole game on lockdown now at this point in time. And they know exactly what the Fed's going to move next, and when they're going to start cutting rates and all those sorts of things, okay? So that's going to matter in a significant way in what Jerome Powell and the Fed does there, okay? Now, this is super important for everybody that owns Tesla stock, okay? So Tesla stock just came off its best week in almost a decade, okay? Almost a decade. Best week since May of 2013. Tesla shares surged 33% this week, marking the biggest weekly performance since May 2013. Absolutely insane. 33% is great for a year for a stock. Tesla just did that in a week. In a week, okay? Now, a lot of people want to know, what's my opinion? Does this run keep going and things like this, okay? So, I can tell you, as somebody that's been a shareholder of Tesla for years and years and years and years, right? I can tell you this. Tesla is a freak company in freak stock. And this stock can go on runs that you've never seen before, okay? And maybe you've seen them if you've been in the stock for a long time. But I'm telling you, this is a rare stock that it builds more FOMO and hype as it goes up. Most stocks in the stock market, as they go up and up and up, you have more people start to want to take profits, right? And start thinking, okay, this might be unsustainable. We're due to pull back. Let's start taking some profits here. Tesla's a different animal, okay? Tesla stock is a different animal. When that baby starts going up, what everybody starts thinking is, I don't want to take profits. They start thinking, I need to buy more. Why didn't I start buying some shares on margin? Why didn't I go bigger? Why am I not going bigger? This baby's going back to 300 and then 400. What am I doing? This stock is still $100-something. The FOMO in Tesla builds so rapidly, it's incredible, right? And if you think about the whole downward move Tesla had, right? If you think about what took this stock from $400+ to $100 a share, 101 at the lows, right? What took it there? There were worries about demand for Tesla. There's no worries about demand anymore. There's worries that their margin was going to get destroyed. There's no worries about that anymore. There's worries about their profitability was going to get destroyed. Not worries about that anymore. There's worries about Elon Musk going crazy. It doesn't really look like it, okay? And so there's like literally like there's nothing left at this point in time. There was worries certainly when it was 300, 400 plus a year or two ago about it's running too fast too soon, and even shareholders like myself spoke up about that many times, right? And you think about that now, like valuation's not a concern now. If anything, the stock's very undervalued. So all the concerns are out the window. Elon Musk looks like he's just fine. Demand's right there. Valuations come down immensely. It's a great deal for anybody that's a long-term investor, right? Margins and profitability are going to stay actually very respectable despite them bringing down the price. And supply chain's no longer an issue. And Berlin and Austin are now in ramp phase. They had that initial kind of tough sledding to get through. And China reopening. Oh my gosh. It's thing after thing after thing after thing. That's now good news, right? And so, I would not be surprised at all if Tesla keeps running all the way up to 200 plus, if not 250, and then kind of makes its move from there. So, don't be surprised if this baby keeps running. Like I said, Tesla is a different animal, okay? Next up here, Monday before the bell, SoFi reports earnings, okay? Now, SoFi, I know a lot of retail investors or traders might even be watching this video right now, and you might own SoFi stock. It might be a small position for you, but you own SoFi stock, okay? Now, here's my opinion on SoFi. This is a company that I almost put them a little bit into the Palantir category of they're having trouble telling their story to Wall Street to get Wall Street to wrap their heads around this, okay? I think SoFi is having even more trouble than Palantir, to be honest. The issue with SoFi is people they're not buying the whole story about this being a fintech company. The way people are starting to look at this is no different than any other like online bank, essentially. That's the way, and I'm not saying that's the right way to look at it, but that's the way Wall Street's starting to look at it. And so they're saying, why would we give them some sort of extreme premium tech valuation when all this is a glorified bank? And that's the way Wall Street's starting to look at it. And so for all SoFi shareholders, that's a predicament you're up against, because all these Wall Street folks, they look at it and they say, so what? JP Morgan has all these online products. Bank of America does, Wells Fargo, all the traditional banks. What makes this special? And that's the issue, right? And they say all the other big banks, they offer all these things, and all the other big banks trade at extremely low valuations. So that's the group SoFi is unfortunately getting put into, the penalty box they're kind of being put into, and no one's buying the story about this being a tech company. And I'm not going to make the argument for it being a tech company or not a tech company. I'm just telling you the way Wall Street's looking at it. And so until, Anthony Noto, right, over there, like gives a story about like that's so good that Wall Street buys in that this is a tech company, be prepared for this to still be a $5, $10 stock for years to come in the future. But if he can tell a story that this is more than a bank, this is more than just some financial institution, that's when they can start to command a much bigger valuation. So that's the problem for SoFi shareholders is you're not just working against the numbers, you're working against the narrative and a story when it comes to the stock. And I know it's very appealing at $5, $6, but all I'm saying is don't be surprised if it's still $5, $6 years from now if they can't tell a better story at this company, okay? Whirlpool reports Monday after the bell. Now, I highlighted this one because I just think this is an important company to keep an eye on. You want to know how the economy's doing? You want to know guidance, those sorts of things, how housing's doing? Pay attention to Whirlpool. They own not just a Whirlpool brand, they own Amana ovens, they own KitchenAid, they own Maytag. So they own several different big brands that sell refrigerators, ovens, all those sorts of things. What does their guidance have to tell us? Their guidance is going to tell us a lot about where the consumer's at and where home building's at, okay? Look at this. Get ready to get your flapjacks flipped on Tuesday after the bell and before the bell, okay? This is just a gauntlet. This is what I call a gauntlet day, okay? No insane company reporting that day on Wednesday and Thursday, but still some insane companies are reporting, okay? ExxonMobil's reporting earnings before the bell. They're making so much money, it's disgusting right now. Will that continue? Probably not. We all know the oil and gas giants, they also have 1-2 good years, and next thing you know, something happens with oil price, gas price, whatever. They have a problem with a refinery, who knows, and next thing you know, profits are hit substantially. But right now, they are in a golden cycle. Chevron, Exxon, all those folks, okay? UPS, do you want to know how the economy's doing and how it's going to likely do? Pay attention to UPS. It's probably not a more important company in the world to pay attention to if you want to know how the economy's doing, especially in the domestic market, the USA, and even on a global stage, okay? You have Caterpillar reporting, another good company to get intel on how the construction industry is going. No, they have a nice backlog, Caterpillar, but the question is, are those orders keeping on coming in? And, I've definitely seen with some home builders, they're pulling back on how many lots they're buying and things like that, so which means less land clearing. So these are just things to kind of keep in the back of your mind. Pay attention to Caterpillar's, not their previous numbers, pay attention to their backlog and their guidance. Very important with Caterpillar, but really the conference call and what they have going on there, okay? McDonald's, overvalued. AMD's reporting after the bell on Tuesday. AMD, we all know, great company for the long term. I've actually even been interested in buying it recently. I haven't bought any shares yet. AMD, everybody's going to be paying attention to guidance. The last quarter numbers no one cares about. They want to know what's going to happen in 2023. Lisa Su is going to have to tell us. Now, Lisa Su is definitely an optimist, but maybe Lisa Su is going to be a little bit more of a pessimist for this earnings, okay? It might hurt the stock short term, but at the end of the day, if you're AMD, you don't want to overpromise on a year like this. We saw the numbers at Intel, straight dumpster fire. I don't know if you guys saw those Intel numbers. Awful, okay? Awful. And so obviously AMD's not Intel, but there's weakness in the overall industry right now, okay? And so if I was AMD, I would set expectations very low. Could your stock get hit in the short term? Sure, but who cares? AMD stock's already been hit massively. Like if it's $70 or $60, does it really matter? No, okay? Set yourself up for low expectations, beat those, come through, impressive throughout the year and do your thing, okay? Snapchat's reporting after the bell Tuesday, not going to pay too close attention, but it's silly, but this one will likely move Meta stock and Google stock after the bell. I know, it doesn't make any sense. It's like, who cares? Snapchat's like this little teeny thing compared to Google and Meta that are these monster companies. But at the end of the day, it's always the way it works out. And if Snapchat says ad market's bad, which it is bad, then don't be surprised if Meta and Google get hit after hours, okay? Speaking about Meta stock, Wednesday after the bell is Meta. This is a stock I personally own. I have $276,000 worth of shares in the public account loan. And when it comes to Meta, this is obviously just a massive earnings for the overall stock market, for the overall economy, right? If we understand if there's weakness in the economy, slower growth, anything like that, the first thing companies usually pull back on is advertising. Many times the second is people and services and softwares and things like that. But advertising is the easiest to pull back on. If your business isn't super strong, why are you going to advertise like crazy, right? If the dollars it doesn't make sense. If you're not getting a positive ROI, unless you're just trying to build brand awareness, something like that, so sometimes it doesn't make sense, right? Now, when it comes to Meta, here's the thing I like. Expectations are super low for this baby, okay? First off, I'm expecting Instagram Reels growth to be insane, okay? I don't think Wall Street really understands the scope of that and what that means and how Instagram's building out into essentially, in my opinion, a more valuable version of TikTok. But I don't think they're going to get that. But that's something I'm personally looking at as a shareholder because I understand the advertising dollars that are going to follow there. It's going to be ridiculous, okay? So Meta, expectations on the floor, 221 expected for EPS, 367 the same quarter last year, right? Obviously, maybe some layoff numbers are in there and that hurts profitability. And plus, if you're expecting revenue to be down, I can understand that, right? But that's a very low expectation, 221 versus 367. Okay. I like going into an earnings like that. You know what else I like? I like this. 6.5% negative revenue is what analysts are expecting, okay? Expectations are on the floor for Meta going into these earnings. I mean, if Meta just comes in, imagine if Meta just came in with 1% revenue growth for this quarter. I mean, oh my gosh, the stock's up 10, 20% the next day. Literally, 1% revenue growth in Meta stock would be up 10 or 20% the next day. It'd be extraordinary, right? Everybody's expecting, it just to be horrible, right? Next quarter, revenue down again, right? And so this is something I'm looking at that I'm like, I'm very happy going into this. Now, if Meta comes in with even worse, let's say they come in with double-digit revenue down, that's a moment in time where Meta does go down, unfortunately. But for somebody like myself that's a long-term investor in this company and wants to buy a heck of a lot more shares, I hope they come in with worse numbers than expected. I hope the stock goes down because I would love to load up more shares. No different than Tesla. I was kind of hoping, secretly Tesla went down on earnings. Unfortunately, it's obviously going to the moon. But Meta's the same camp. I hope this baby goes down. But if they report anything decent, because it's still beating down stock. Has it come back a lot from the lows when it was under $90 just a few months ago? Sure. Back in October, I think it was, or early November? Sure. But at the end of the day, let's be honest, Meta should be a $300+ stock right now. So 151 is still a steal deal in that one. Now, what a lot of Wall Street's going to want to hear about is Oculus They're going to want to hear about MetaQuest. They're going to want to hear about, not because they actually really care about these products, but because of the spend Meta's been doing. And so they're going to want to hear how much you guys spending, what's going on here. If Zuckerberg can tell a good story around that about, I think we're going to be very conservative with our spend. We're not going to, we're going to watch our expenses very diligently, blah, blah, blah. Don't be surprised if the stock pops on that, because this matters more in the numbers for Meta right now. And I know that's kind of silly, but Wall Street, they care so much about how much money Meta is spending on this, because Wall Street's not bought into this whole thing at all. Not at all. And think about it like this. This is extremely important for everybody watching this. Little lesson right here, okay? Little gem for you. Different stocks have different investor bases, okay? For instance, a Tesla stock, anything they do that is a growth-related thing is seen as a positive. No one second guesses that, okay? For a company like Meta, because Tesla's investor base is obviously growth investors, right? For a company like Meta, their investor base is not really growth investors. It's value investors. Value investors don't like it if you're taking some risk and spending a bunch of money on some new growth opportunity. That's not really what they're in your stock for, right? So this is why certain companies have trouble doing some game-changing stuff, because they attract different shareholder bases, right? Same thing with Apple. If you wonder why Apple hasn't done anything necessarily game-changing for the last decade, right? They're still running off all the fumes of what Steve Jobs put together there. I don't think it's just the fact that Apple doesn't have Steve Jobs, for the past decade plus. I think it's also for the fact that, think about Apple's shareholder base. It's not a growth investor base. That growth investor base left back around probably like 2013-ish. That growth investor base left. And ever since then, a value investor base came into Apple stock, and that's who owns that stock. So if Apple said they were going to spend, $50 billion over the next 3 years on a metaverse opportunity, I wouldn't be surprised if Wall Street sold that stock heavily, because a lot of value investors are like, what are we spending all this stupid money for? We don't like that. We want profits. We want dividends. We want share buybacks. We want to build the balance sheet stronger, right? We want the income. We want the income statement being beast. So you got to understand, different stocks have different shareholder bases around them. And that's going to be the biggest probably subject of the conference call, to be quite frank, okay? Speaking about Apple, Thursday after the bell, the $2 trillion beast is reporting earnings, okay? Now, for Apple, there's some problems here, folks. Some major problems. The first one is, look at revenue growth. They only have revenue being down 1.8% for the quarter. Now, we know the consumer was weak in the Christmas quarter. We know that, okay? We've gotten confirmation of that, right? But not only that, they had all types of supply chain problems from the Shanghai Gigafactory. That must have affected numbers. So, I think if they only have revenue down 1%, I think that's a win for Apple, to be quite frank. But don't be surprised if they come in with a revenue down 4 to 7%, something in there, right? They also have EPS coming in at $1.94. That wouldn't be that bad, honestly. So I don't know. Either Apple's just going to report another extraordinary quarter, which, once again, this is extraordinary if they report this, or analysts are a little too bullish on their stock and Apple's going to report very disappointing numbers. Also, next quarter is important because analysts basically have them doing EPS in line that they did last year with 1% revenue growth. I don't know, man. In this current environment, there's not a lot of hype around any Apple products to be. I'm trying to think of any Apple product that has a lot of hype right now. And honestly, what even moves volumes for Apple? It's iPhone. So let's just talk about iPhone, because that's the only thing that really matters to Apple, right? Everything else is just little numbers, okay? Does iPhone have any hype around it right now? Absolutely not. None. And so if you're talking about a weak consumer environment, which we're clearly in, and you're talking about their main product doesn't really have that hype around it right now, I think it's tough sledding to even report 1% revenue growth. I wouldn't be surprised if their revenue is down again in the March quarter, to be quite frank. And I wouldn't be surprised if their EPS is down substantially. Now, if Apple goes down big, that's going to send ripples through the entire stock market, because at the end of the day, Apple's weighting on the market, folks. We're talking about Apple has a weighting of, just in the NASDAQ and S&P 500, it's the heaviest weighted company out there, right? And in some of those indexes, it can be 5, 10%, somewhere in there, right? So if that baby goes down, it's sending all the semiconductor stocks down. It's sending likely all the other big tech stocks down. It's sending the NASDAQ 100 down. It's sending the entire S&P 500 down. It's sending the whole market down, okay? With Apple goes the market. It's kind of a pretty simple game, right? And so that's something important, I think, for all investors to just kind of keep in mind here. if you're rooting for the market to go down and to get better deals on stocks, root for Apple to report bad earnings, bad guidance, bad conference call, bad everything, okay? Then, if that wasn't enough, we got Amazon. Amazing's on reporting Thursday after the bell as well, okay? Now, with Amazon, here's the thing. Amazon, they're expected to have about 5 to 6% revenue growth. We know the consumer was weak in the Christmas quarter, so we shouldn't expect too much from the e-commerce side of their business. But they got AWS that's consistent growth every single quarter. And so is it possible for them to have 5-6% revenue growth? I think that's definitely possible. As far as EPS, analysts are expecting a disaster, 17 cents versus $1.39 the same quarter last year. Keep in mind, Amazon comes in with these incredible EPS beats all the time. So maybe they come in with another one of those. It's going to be a funky earnings period for Amazon. I don't know what to expect. I mean, even look at next quarter. Next quarter, the same, in the March quarter last year, they had negative EPS, right? Now they're expecting 27 cents positive EPS in the March quarter, right? With 7.5% revenue growth. I have no clue. All I know is if Amazon drops in any substantial way, I'm picking up a lot of shares of Amazon. If it drops in any substantial way. If it drops a small amount, I'll pick up some more shares in the public account. But this is one I'm hoping. If you ask me, there's two stocks I hope really drop the most, Meta and Amazon. I'm hoping, okay, which means those won't be the one that drops because it never works out that way, but I hope, okay. Google, McDougal, Thursday after the bell. This is intriguing. We know Google has a nightmare on their hands between the government, between, the new chat program, the artificial intelligence program that's, supposed to be a competitive threat to Google. We'll see how that works out over time, right? But look at this, folks. Look at this. As far as revenue goes, analysts have them at 1% revenue growth. 1% revenue growth. Meta's at negative 6.5%. And Meta and Google have somewhat similar business models. And if people are cutting back, ad budgets on Facebook and Instagram, I'm sure they're probably going to do it on Google AdWords as well and YouTube. So if that's the situation, how's Google going to have 1% revenue growth, right? So I don't know. And obviously Google has other lines. They have their Android business, right? They have obviously their cloud business. They have, other businesses that Meta doesn't have. But still, I just think that's intriguing. 1% revenue growth when Meta's at negative 6.5%. That's going to be an intriguing one there, okay? Qualcomm, this is a stock I own in my dividend-only account. It's done tremendously well, one of the biggest semiconductor giants out there. It's another one of those stocks that if you want to know how the economy's doing, pay attention to Qualcomm numbers, just see what they have to say. Their chips go into almost everything. I don't want to say everything, man, but it is like one of the biggest semiconductor giants out there, especially in the mobile space. And if they have, if they report any weakness, the market in general is bad, okay? Starbucks is reporting also Thursday after the bell, okay? So you got Qualcomm, Apple, Amazon, Google. You got Starbucks also. Now, Starbucks, only one reason. Only one thing to look at with Starbucks earnings, unless you own the stock, okay? Only one thing. Listen to what they have to say about China. We know China's been reopening. What do they have to say? Is their business having a big tick up because of obviously the China opening back up more in more of a substantial way? I don't know if you guys knew this about Starbucks. Listen to this. This is going to absolutely blow your mind. They were opening, and I think they plan to still open, one store every 9 hours in China. One store every 9 hours in China. That's just a number that's hard to even fathom, right? So they got a substantial business in China, and that's just something to keep in mind there. And that'll give you good insight on LVS, Wynn. We know Macau's coming back strong as Donkey Kong. That's great for us. We love to see that. But, I think you keep an eye on what Starbucks has to say about China specifically. I think that's important. Hope you guys enjoyed today's video. As always, if you're looking to join in my Patreon and see what stocks I'm buying and selling and support the channel, check out the description area. If you're looking to apply to join my private stock group and the private wealth group, also check out the description area, and also doing something pretty exciting in the Patreon for the Patreon squad. So every month we're going to do a drawing essentially where everybody in the Patreon can enter in, and somebody will be able to win a free membership inside the private stock group and private wealth group. So that's going to be pretty awesome. So make sure you get in by February 1st if you're interested in that. I will be sharing the link out on February 1st. Appreciate everybody. Much love as always, and have a great day.